good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar. Traders, we are the short-term traders with the long-term plan, and that plan involves doing a lot of analysis and a lot of homework every evening, every morning. I do analysis all the time because the markets are always open, so I'm always studying the markets. When they're open, I'm thinking about them. I try to stay in tune with the markets. That in mind, this is 11/12/08 Wednesday. This video, we are looking at the same thing that we've been looking at for a few days now, traders. I have said to you in many videos that doing analysis and living the life of a trader is basically like being in a book that never ends. You're always reading through the chapters. Then a page comes up, it might be moving averages. The next day a page comes up, they might be pennants. The next time a page comes up, you might be looking at flags. You never know what the story is going to be about. That's the beauty of trading. It always changes every day. Lately, the story has been the inverted head and shoulders in the S&P, in the NASDAQ, in the Dow Jones Transportation Average. It's in the FTSE, it's in the Nikkei, it's all over the place, the German DAX. With that in mind, these past couple of videos, I was telling you that we had this inverted head and shoulders, right? And there were many analysts saying that the bottom was in and this is going to be a big run up. And I was steadfast and I said, no. Traders, let me teach you something. That's not how inverted head and shoulders in a bear market work. They usually produce a small rally and the market breaks down. The next thing that happens, or the next page that we turn, is this. We had the small rally, the market began to break down. On the next page now is the test of the middle of the head. And that's where we are at right now. That test started 2 trading sessions ago. It looks like it's going to complete that test on Wednesday. And I have some charts that I would like to show you. But remember, traders, we are still mired in the inverted head and shoulders formation and the expected test of the head down below. That's where we are. That's the page in the chapter of the trading story that we are in right now. And let me take you to some charts so I can illustrate that to you and show you what to expect. Let's take a look at the charts, traders. Be right back to you. Okay, traders, you are now looking at the S&P December daily bar chart. I held this very same chart before your eyes a few days back. 1, 2, 3, 4, 5, 6, 7 days ago, traders. When the chart looked just like this, that was all you had there. That was the last day of the chart. And I said it is my contention that this will have nothing but a rally, which will turn around and break, and then we get a test of about the 50% area of the head, right? Here is what happened since. You had your small rally, you had your drop, and now this line would represent about the 50% mark of the head. And look at how close we have gotten to it so far, traders. That is top-notch, 100% dead-on technical analysis. It did exactly what it was supposed to do. If you are a student of the analysis arts, it should have had a little rally. It should have broken, and now it has to test right here. If, in fact, we get below the 50% mark and end up settling down here, we know we have a big break coming in this market. That is the way it is shaping up right now, traders. I would expect it will continue in this fashion. On top of that, you now have this pennant formation that has formed once again. Last week, we had the same sort of formation, but it was in here more. We broke out of that. Now we have a much larger one. We are below it at this point in time. And technical indicators are quite bearish at this point. Most of our indicators right now have gone over the overbought mark when we got here and are all pointing down. I'm going to show you a series of those indicators right now, traders. I would show you basically the most common indicators that most analysts use, and I think it's a very wise thing to do because if you are using indicators that no one else uses, the odds of them working are not very good. So if you use the ones that the herd uses, at least you know which way the herd will go when the market starts reacting to those indicators. with that in mind, let me show you some of those indicators now. Okay, traders, the first indicator you are looking at here right now is the Commodity Channel Index on the December S&P Daily Bar. Clearly, this is pointing towards the downside. You see that the average is pointing down. The other average that's involved in the calculations is they're both pointing down. It got up here where it usually begins to get tired and came right back down. So the CCI, or Commodity Channel Index, is certainly pointing towards a lower S&P move. Let's look at a few more indicators. Okay, traders, the next widely used indicator here is the slow stochastic. Slow stochastic clearly is pointing towards the downside. As you can see, you got across the overbought mark, turned and broke down. You can see %K and %D had crossed up here, and they are in a pretty good look, like they want to continue all the way down to the oversold area. So stochastics and the Commodity Channel Index both pointing towards lower prices in the S&P. Let's look at a few more indicators. Okay, traders, one of my favorite indicators to use is the ADX or the DMI. They both work around the same. The WADX is what you're looking at here. When the minus or negative is pointing up and the positive is pointing down, as you see is going on right now, that is a bearish continuation signal. So now you also have the ADX pointing down. So 3 of the popular indicators that are used by very many technicians out there are pointing towards the downside. If you look, almost all the indicators you can find right now are pointing towards the downside. Let's look at another one. Okay, traders, you are now looking at the Relative Strength Index, the RSI of the S&P December Daily Bar, and this too is clearly pointing down. Look right here, traders. No divergence, none whatsoever. Indicators are clearly pointing lower across the board, and they are pointing lower in the Dow Jones Transportation Average, the Dow Jones Industrial Average, the NASDAQ, the ETF. They're pointing lower in the DAX. They're pointing lower in the FTSE. They're pointing lower around the globe at this point in time. So I would imagine that we do have more downside coming. Traders, not every market goes straight down. Of course, you will get your intermittent rallies, but we are certainly in sell the rally mode here in world indices and especially S&P. So you've seen the charts, traders. You see that formation? Inverted head and shoulders in a bearish market really does do exactly that. You've seen, if you've been following my videos these last 3 or 4 since we got involved with the inverted head and shoulders, you see it did exactly what it should have done technically. Traders, that is technical analysis firing on all 8 cylinders, baby. You can't expect more from any other type of indicator on this planet. The newspapers aren't going to tell you what to do. Reports from the government would never be able to give you a picture like that. The analysis, the technical analysis, gave us a picture painted stating up a little, down, and test ahead. Wow, traders, that is fantastic. That is one of the thousands of techniques that we use at the Omni Trading Academy, and we would like to teach you how to do analysis and call markets like we do. Come on down to www.livewithoscar.com, grab yourselves a free membership, jump in the chat rooms, and let us help you become a better analyst and trader. All right. I know you're all hearing the news, GM, see you later. Donald Trump losing his building. There is bad news all over the place. Circuit City, see you later. Traders, where are all of these people going to get jobs right now? And how are they going to spend any money for the Christmas holiday coming soon? You see what I'm getting at here? Imagine how bad the reports are going to be going forward. How much higher unemployment will be. How much less money will have been spent in this country. How much worse the reports will come out from all the retail stores across the country, let alone everything else that's going on when we hit the Christmas season and no one buys anything. Yes, of course, people are still going to celebrate. That's not what I mean. But if you spent $5,000 last year, I'll bet you this year you're spending $3,000 or $2,000 or even less. And that's the way everyone's going to be. Because if you open up your 401k envelope, the only thing you can do is stick your head in the sand and wish it went away. And I know that's what's going on with everybody. And that's why we're here teaching you traders how to be better at protecting your money. So allow a 26-year veteran analyst to be on your team and help you get this right. I think you can use someone like me right now, and I don't mind lending a helping hand. So come on down and allow me to be your analyst and help you become a better trader and manage your own money. Traders, give me a call day or night, 702-629-4755. And as always, continue to shoot me out those emails. Please send your emails to oscar@futuresanalysts.com. Guys, am I out of here? We're done. Traders, these markets are volatile. Use your stops. Always place stops. Always place them first. And remember to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.